Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of petrochemical sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The petrochemical sector in Indian share market is a vital part of India's industrial landscape, providing essential raw materials for numerous industries such as plastics, textiles, pharmaceuticals, agriculture, packaging, and automotive. Petrochemicals are derived primarily from crude oil and natural gas and include products like ethylene, propylene, benzene, toluene, and xylene. The key growth drivers for the sector includes rising domestic demand, import substitution, low per capita consumption, government push for manufacturing and expansion projects. The government supports the sector with policies like Petrochemical Policy of 2007, PLI schemes for chemicals, and 100% FDI allowed. The major challenges for this sector includes feedstock availability, environmental regulations, import competition, high capital intensity, and transition to green alternatives. That's a summary of the sector. Let's now try to identify trends in this sector using two graphs, yearly returns and monthly returns graph. I've analyzed the share price movement of last 10 years of top 10 companies of the sector and created these graphs based on that data. The top 10 companies of this sector comprises of 1 mid cap and 9 small cap companies. So let's start with the first graph, which is the yearly returns graph. So in this graph, the green bars over here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down at the bottom shows the cumulative returns. The green line shows number of months with positive returns and the red line shows number of months with negative returns. Let's start with 2015. 2015 was a very good year for this sector and the sector managed to give 63.18% returns in that year with 7 positive months and 5 negative months. 2016 was a dull year for this sector, and the sector gave only 13.06% returns in that year with 7 positive months and 5 negative months. But then the sector skyrocketed in 2017 from 13.06% return in 2016 to 154.36% returns in 2017. Exceptional rise in 2017 with 10 positive months and only 2 negative months. But then sector nosedived in 2018 with minus 40.65% returns, 9 negative months and only 3 positive months in 2018. In 2019, again the sector gave further negative returns of minus 28.32% with 8 negative months and 4 positive months. But then the sector performed extremely well in 2020 and gave returns of 52.46% in that year with 7 positive months and 5 negative months. In 2021, this sector again skyrocketed and gave returns of 148.04% with 9 positive months and 3 negative months. 2022 proved to be a flat year for this sector, and the sector managed to give only 4.56% returns in that entire year with 7 positive months and 5 negative months. The situation improved a bit in 2023, and the sector managed to give strong returns of 37.73% in that year with 8 positive months and 4 negative months. And 2024 too was a strong year for the sector as the sector gave 31.25% returns with 6 positive months and 6 negative months. To check the cumulative return, let's follow this orange line over here and 10 years cumulative returns 1326.96%, which is more than 14x in last 10 years, which is a extremely good return. Let's see the key takeaways. First is the cumulative return 1326.96%, 14x. We have just seen that. CAGR of 30.45%, extremely good CAGR, no doubt about it. Very good CAGR. Net negative yearly returns only twice. Again, a good number. We have seen numerous sectors with more than two negative years in the last 10 years. Best year was 2017 with 154.36% returns. 10 months gave positive returns in that year, and only two gave negative returns. The worst year was 2018, and the sector managed to give minus 40.65% returns in that year and gave negative returns in 9 out of 12 months in that year. Positive to negative year ratio is 4 is to 1, a good number for this sector. So, all in all, impressive yearly returns chart. Now, let's look at the monthly returns chart as well. This is the monthly returns chart, and the first impression, it is quite a zigzag kind of chart. Anyways, the green bars over here shows the positive mean monthly returns. The red bars shows the negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. Let's start with January. The average monthly returns for January is 0.56% with six positive years and four negative years. So a flat month, I would say, for the sector. February and March are two extremely bad months for the sector with average monthly returns of minus 2.42 and minus 2.59 respectively. In February, the sector gave negative returns 8 years out of 10, and in February, 6 years out of 10. So, bad 2 months for the sector. But April seems to be the best month for the sector with 12.19% average returns and 8 positive uh, years and only 2 negative years. May again a bad month for this sector with average monthly returns of minus 1.65, 7 negative years and 3 positive years. Then June, July, and August seems to be stronger of the months for this sector with 5.31 percent returns for June, 7 positive years and 3 negative years. 5.63% returns for July, again 7 positive years and 3 negative years, and 4.85% for August with 8 positive years and 2 negative years. So, three consecutive good months for the sector, followed by a flat month of September with negative 0.15% average monthly returns with 5 positive years and 5 negative years. October is a very good month in terms of returns for this sector with 7.04% average monthly returns, but in terms of consistency, it gave positive returns only 5 times but gave negative returns for the rest of the 5 years. November, another flat month for the sector with 0.38% average monthly returns, 5 positive years and 5 negative years. December, another decent month for the sector with 4.40% average monthly returns, 8 positive years and 2 negative years. So I would say not such a impressive graph as the yearly returns graph. One, two, three, 4 months with average negative monthly returns and couple of months with flat returns. So 6 months are gone. The sector actually produces returns for its investors only in the rest 6 months. Let's see the key takeaways from this graph. Cheaper months February, March, and May. February, March, May, and in fact September too can be included. So as January and November. So basically 6 months are cheaper months for this sector. Costlier months are April and October. So April clearly the best with 12.19% average monthly returns with 8 positive years, and October with 7.04% average monthly returns. Positive to negative month ratio is 1.31 is to 1, which means 1.31 positive months against each negative month in the last 10 years, that is, in the last 120 months. So, this graph is not as impressive as the last one. That is very clear. The major returns of this sector comes in the month of April, and then probably in June, July, and August, and that is all I would say that is in this sector. September does not give anything. October is A chance, I would say, if it gives positive returns 5 times and negative returns 5 times. That is all from my side in this video. Thanks for watching it, and click the like button if you have enjoyed the content. Subscribe to the channel and share it with your family and friends. I'll be back soon with another video. Goodbye for now.